Stocks are off their earlier lows. The Dow still off, though, about 2% for the week. To bad news. Is this the start of the correction that many people have been waiting for? You know, corrections like 10%. Let's ask our Power Lunch Market insiders. Joining us now, Hugh Johnson of Johnson Illington Advisors and Bill Spiropoulos of Core States Capital Advisors. Bill, let me start with you. I'm sorry, but it just seems a little too early for this big correction to come. What do you say?
We hoisted the yellow flag about 3 weeks ago, saying that you know, there'd probably be a 5 to 10% correction now rather than later in the year. And based on all of the tomfoolery coming off the Hill, I'm going to stick by that. It might actually, if they do a lot of dumb things, it could be a little more severe than 10%.
Right. And Hugh Johnson, you know, already the market, I think, is down, the S&P 500 down 3% from its high of the 19th, roughly. What do you think? Is this the start of an accelerated decline, or are we going to hold our own here?
Yeah, well, I have no idea. Obviously, having corrections along the way is not unusual in a bull market. I think you just look at it as a correction, and whether it turns out to be 5% or 10%, I don't know. But after, you know, when we talk about a 65% move up in stocks from the March to December time period, to get a 5 to 10% correction is, to me, common sense and predictable. So I wouldn't really be concerned about it. Obviously, it's being driven by concerns about the economy going forward, that a lot of the stuff that's going on, whether it's a Massachusetts election or what's going on in China, raises questions about the outlook for the economy. But believe me, we're talking about only a correction in the context of a bull market.
Now, Hugh, I understand that you project that inflation will be stronger than forecast, but yet it seems like you're very bullish. How does your inflation outlook affect your perspective?
There are two things you've got to focus on for 2010 and 11, for that matter. One is the economy and earnings, and in my judgment, the economy, and importantly, earnings, are going to be a lot better than anybody is currently forecasting or expecting. So we're going to have a series of pleasant surprises. Quite frankly, we've had that for fourth quarter earnings. You take a look at GE earnings and a number of other earnings reports, they've been better than expected. So that's the good news. It'll be offset to some extent by higher inflation and higher interest rates, higher than expected. But the good news, we're at that stage of a bull market. And look at it historically, we're at that stage when the good news of the economy and earnings, those good reports, will more than offset the bad news of inflation and interest rates, particularly with interest rates being as low as they are.
Gentlemen, thank you very much. Appreciate it.